Sandeep Jain, ED at Monte Carlo Fashions, is joining in to talk about the yarn price cool-off, the cotton segment, as well as the ease in input costs. Good to have you on board, and I'm going to get straight to it. Yarn prices, they've definitely come off, and the company had undertaken a price hike previously. So what is it that you're looking to do at the current juncture, given the fact that we have seen yarn and cotton prices falling further? Will there be more price cuts?
See, as far as yarn prices are concerned, so whatever there was increase in raw material, so we taken a hike in our summer products which have just gone into the market. And the yarn price which have come down now, so we'll only be getting use of it when we make the summer products for next year, because this year's autumn winter production is already planned. So I think if the price remains low and it comes down further, so definitely it will benefit the company in next summer year prices. So the end product doesn't go down, so it will definitely improve the market.
Okay, fair enough. Now let's talk margins. They were above 20%. Given that the fall has been taken in raw material prices, is there a possibility that your margins could better from the current levels?
So it's very difficult to say. I think we can sustain our margins because already whatever price increase was there, we have taken it, and the next year's prices has not been decided yet. So we'll see what kind of raw material prices we have in September and October when we plan for our next year's production. So accordingly, I think then only we will be able to tell how much improvement in the margin it can be if there is a tremendous fall in cotton prices.
Historically, what's been your experience? I mean, the change in yarn prices, the change in raw material prices, the change in cotton prices, are they complete pass-through?
Whatever increase was there for last year, we have already passed on everything to the retailers and customers. And see, we book almost 6 months in advance. So whatever price increase was there in raw material prices, we have passed on to the products to all our retailers.
What are the demand trends indicating? It's been difficult for all of us to understand demand trends in a linear manner because last 12, 18 months or last 2 years actually have had an impact of COVID. First, sales came down, then there was exponential comeback in demand, then there were partial lockdowns. So some regions were doing well, some regions were not doing well. What is your experience? Are things back to pre-COVID? Is demand really looking strong?
Definitely. After the COVID, we grew almost 45% in last financial year. And the demand is so strong that we have recently conducted a trade show for our winter products, and we got actually very good volume growth also. So accordingly, we gave our guidance of 20 to 25% revenue growth for this financial year also. And we have seen that once we had, the COVID is almost ended now. So there have been increase in footfalls at the retail stores, and there increase in spending also. So that is why we have given our Q1 business update also that we have grown even at pre-COVID level also. So that shows that the demand is back in the market, and I think the government will be able to control the inflation, which is, I don't think it is going to last long. So we will have a very good year going ahead.
Okay, so you're expecting demand to sustain because, we keep getting mixed commentary also from consumer good companies. Is there a degrowth? Are volumes going down? You're saying something very different, that you have not seen any pressure of inflation on your sales. Of course, for the quarter gone by, when we've seen that big jump, it's also because, you've enjoyed the base effect that was at play. So you're saying demand is not impacted.
See, there is a difference in what consumer goods companies are saying and what I am saying. Consumer good companies basically speak on the behalf of masses. So we are not basically only serving to masses. We are serving to mid and upper premium segment, where the inflation has not impacted, most of the mid and upper premium segment. Yes, it has impacted the masses. So that is why consumer goods companies are suffering the most.
And you will go ahead with all of your plans. You talked about 10 new store openings. You have big plans for the year as far as more store openings, etc. going. You're going ahead with that, or are you seeing an opportunity to maybe step on the gas?
No, I think we are sticking to our original plan of opening 30 showrooms. We'll be very watchful for the economy, how it moves in next 3 to 6 months. And if everything goes well, the number can be increased. But we stick to the original plan as of now.
Monte Carlo also has a very strong woolen line. Product line is very strong in terms of sweaters and woolen garments. Will global warming affect you at all?
See, it's not like the people wear woolen sweaters only in the when the winter is on. It is a fashion product, you know. So whenever there is any need of fashion, you wear woolen and you wear garments and we wear jackets also. So as we have temperature controlled areas everywhere, so it's not that you wear only woolens for to save yourself from the winter stuff only. And secondly, we have seen that as after the COVID, a lot of evening get-togethers, birthday parties, and weddings. Now they are, increase the number of people, and there is no limit on restrictions also. So that is also pushing the sales.
Okay. Just to wrap it up with the online business, what is the growth there? Well, Monte Carlo is a good brand. The stores are prominent. All of us have grown either being, your customers. But if I look at the new millennium, the Insta generation, the online purchases, what's happening to that business? How are we going to keep the relevance of the brand important?
See, in last 2 years, we have grown almost 50% in our online sales. The contribution, which was just 3% 2 years back, it has grown to 7 to 8% now. Because most of the people after COVID, they were purchasing online and everyone was like not going to the markets and not going to the retail stores. But this year, scenario is a little different. People have stepped out of their houses. They're going to retail stores. They're going to the malls. They're having revenge traveling and revenge shopping. So I think the online will grow at par with the offline stores, and we assume that our online business this year should grow 20 to 25% at par with the offline store business, which is again 20 to 25%.
Online will grow at par with offline. Thanks very much for joining in, sharing with us your overall business outlook and the price impact.